Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For all trades, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. It is primarily for the TSTW24, TSTWSY08, and the TSTWSY008 traders. Okay. Today is the 20th of April 2012. 20th of April 2012. And the time in London is 14:11. Okay. The time in London is 14:11. In New York, the time is 9:11 a.m. Okay. The title of this video is Trading Plan 4060. Trading Plan 4060 or TP 4060. Tango Papa 4060. What is Trading Plan 4060? What is the purpose of Trading Plan 4060, and how one can use the TP 4060. Alright, we will also discuss the Fibonacci retracement and the Fibonacci extension. At the end of this video, one will be able to understand and to know how to apply the TP 4060. This is the main topic. When the main topic is behind us, okay, we will talk about the Euro Australian dollar, we will talk about silver, and also about the S&P 500. Last weekend we were talking about a trading plan, a 1200. If you have not watched the video about trading plan 1200, you need to go to www.youtube.com/jotrio and look for the video title Trading Plan 1200. Okay, very important. It's about making a target at the beginning of the week, taking 4 trades during the London session and 4 trades during the New York session. Okay, so 8 trades per day. Okay, as I explained to you, if you want to know more, you have to watch the video TP 1200. Okay, we also say that we will take 8 trades per day and times 5, that's a 40 trade per week. Okay, so Monday 8 trade, Tuesday 8 trade, Wednesday 8 trade, okay, Thursday 8 trade, and Friday 8 trade. Sometimes Friday can be a tricky day when one will find it very difficult to take 8 trade, but you do not have to take 8 trade. Okay. Also, regarding the TP 1200, a trading plan 1200, okay, we say that, okay, though your first target is 1,200 pip per week, you will not start with that target straight away. You give yourself 300 pip for the first week. If you achieve that, you move to the 600 pip, then 900 pip, and then 1,200 pips. Each time that you fail to reach the target, you will go back again and start with 300 pip as your main target. Okay, and once you achieve the 300 pip, the next target is 600 pip, and so on and so on. You may like to watch the video titled Trading Plan 1200. This will allow you to build what I call a winning pattern, discipline, following the price of the #1 indicator. Okay, it does not matter which trading plan that you are using. The system, okay, that we are using, or the foundation of every trading plan, is the foundation of ladder, step by step, ladies and gentlemen, step by step, no rush. Okay, going one step at a time to reach a goal. Your goal is somewhere. Yeah, you want to use it step by step, step by step. I see sometimes traders are rushing, okay, try to jump the steps and they get hurt. The steps are here, okay, so go step by step. Do not give yourself, okay, some unreasonable target. Give yourself easy target that you can achieve. So that's why you start with 300 pip, and then 600 pip, 900 pip, 1,200 pips. Okay, but it's up to you what you try to do. Whether you are a gambler or a serious trader, you will decide what to do with your own money. Okay, so today we will talk about a trading plan. 4060 is different from the trading plan 1200, and we will start talking about what is the trading plan 4060. The TP 4060 is a money management tool for recouping or for recovering past losses. It's that simple. So you lost some money, losing trade do happen. Remember, that's why we stick to the 5% money management rules and apply stop loss in every trade. Managing the trade, paying attention to the trading triangle, banking money steadily instead of aiming too high. So the TP 4060 is a money management tool that is for recouping the past losses. So this is it. The TP 4060 is a money management tool for recouping or recovering past losses. What is the purpose of a TP 4060? The purpose is to recover at least 60% of losses that occur in the last financial period, i.e. last year, whether it has been profitable or not. So the purpose is to recoup at least 60% of the past losses that has occurred in the last year, for instance. So suppose in the year 2011 you lost a lot of money. Now with the TP 4060 you will set a target. I will explain to you how you do that in the next part of the video, and you will know with the TP 4060 how to gradually, step by step, recoup some of the past losses back. This is the purpose of the TP 4060. How one can use this powerful tool. That's the challenge. As always, we will use it in a simple manner. So we're going to set for ourselves a target to recoup 60%. That's the purpose of TP 4060, 60% of our past losses. So if you lost, for instance, in 2011 you lost $1,000. 60% of that $1,000, that's $600. So you're going to set for yourself a target following step by step the rules of TP 4060 to recoup not the $1,000 that you have lost, but only 50% of that $1,000, which is $600. So now you know what is the TP 4060. You know the purpose of TP 4060, how one can use the TP 4060. It does not matter whether you have already used the 5% money management rules, that you are using also stop loss in every trade, that you are managing your trade. Money management is a very important part of trading and investment. You may end up, for instance, in 2011, you may end up with a profit. So at the end of the year, you have made maybe 10,000 profit. That's great. But during that year, still you lost some money. It was not every day, every trade, or every investment that was a winning investment, so to speak. Though you finished the year profitably, there were some losses, and the TP 4060 is to recover 60% of the loss that you have that has happened in the previous financial year. This is it. Very simple. Now if the whole year you have lost, it means that you end up with a losing account. That's you have to add it together, make it the loss of that period. So you have to understand, it does not matter whether you have a profitable year or you have a losing financial year. You can apply the TP 4060. So how one can use the TP 4060. I invite you to follow us in the next part of this video.
Now we
and I'll
know
see
what
you
is
there
the TP 4060
and also the purpose of TP 40C0 is a money management tool to recoup 60% of past losses. Okay, as I explained to you, for every trading plan or every investment plans, we will use the step-by-step strategy, no rush. Okay, because in every transaction, okay, there are risks that are involved, and we want to go step by step, being very patient, being in control of the situation. If we do not like it, we will stay out. So there is a time to buy, a time to sell, and a time to step aside, going step by step. So we must have a plan and also a trading tool. But the most important trading tool is the investor or the trader. He or she will make a decision. Okay, but the experience, okay, the knowledge is very important. Or in practice, okay, will get you there. But remember, always go step by step. Do not give yourself a target, okay, that you cannot achieve. You want to give yourself a winning start, going gradually over the time. Okay, very, very important. Okay, now how one can use, okay, the TP4060. Okay, all right. Now, before I start with go deeply into the TP4060, I'm going to explain to you, because I promised that we will discuss the Fibonacci retracement and the Fibonacci extension. But I will discuss one typical, okay, Fibonacci retracement and Fibonacci extension. We see very often, okay, that the price will move from A, which is this point here, to B. Okay, so this is a kind of a bullish movement, impulsive move, so to speak. If I went boom, 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 up, okay, break a resistance on the way to a certain level and then stops, and then the price will come down. It doesn't matter whether you are trading a stock, commodity, or any other financial instrument. Financial instrument will go up and will go down. Sometimes they will go up longer and then they will pull back. Now, very often what we have noticed, ladies and gentlemen, is that the price or the investment or the assets, okay, may rise to a certain level. Then the investor or the traders will take some profit and the price will come down. Okay, the pullback that we have seen, the profit taking that we usually see, is in the zone of 38.2%. So from here to this level, people will take 38% of the profit that was accumulated from A to B. So when they take that profit, the price will drop down to 38% of the move from here to this level. Now, but I don't want to talk about 38.2% because some people may say, what's that? I will talk instead about 40%. That's why we talk about, okay, trading plan 40C0. So instead of 38.2, I'm talking about 40%. Okay, that's how I want to put it to you. So the price is coming down 40%. Price usually will come down 40%. So it comes down 40%. Sometimes you go to 50%, sometimes you go to 60%, sometimes you go to 75%, sometimes to 80%, sometimes you go down even to 100%. Like we have seen recently for Research Motion or RIM. Okay, the stock went down 80% already. Okay, it went down 80%, but very often in normal condition the price will come down 40% or 50% or 60%. Okay, but in this case, the example that I'm giving you, suppose the price, the asset that went up from A to B, okay, people took 40% of profit. Okay, so here down, according to the Fibonacci extension. If you want to know more about Fibonacci, you need to go to www.dayprotrader.com and of course go to YouTube, watch the video from my fellow traders, okay, about Fibonacci. All right, now, so if the price, okay, if the asset, if investor and traders took 40% of their profit after an impulsive move, after a training period, okay, very often if they start buying again here after they take profit, if they like the financial instrument, if the fundamentals are sound, if the company is creating excellent product, if the economic environment is solid, okay, if a new bullish cycle is about to begin, if the conditions are favorable, so to speak, ladies and gentlemen, they will buy again because they know that there are more, okay, to come. So they took 40% and they are likely to come back for more because they like what they have seen and they want to buy more. So they took profit here. So it becomes the financial instrument. In fact, we can say that it has been discounted. Okay, so you were buying silver, you are buying gold, gold went up, big, all right, and then it pulled back big time. fundamentals still solid, you know that it's going to go up again, you want to buy, yes or no. That's what's happened during the gold rush. You see, from 2008 till now, gold was going up. If you didn't buy it before that, I mean, ladies and gentlemen, it's too late for you, okay? Now, so you want to buy, okay? What usually take place after 40% retracement? So you see the pullback, okay, which is here, what I call healthy pullback, which is everything is still intact, in good condition. The price want to go up again, but that's what I call a healthy pullback. So 40% was taken out of the move from here to here. So only 60% was not taken away, okay? 60% was still here, all right? What usually takes place when the price starts a new move from upsides, which I put here for you, the movement I will start from here, that's why I put from here to this level. You see, when I'm talking about area wave, when we are talking about Fibonacci, we are talking about something, okay, a divine. That's why I like to put it to you. You may say, just shut up, but that's how I like to put it to you. But once we take 40%, okay, very often, life will give you back the whole length. You see, it went from here to here. Okay, it will give you back exactly that. Okay, the whole 100%, it will give you 100% of what has happened before. If you started from here, it gives you 100% of what has happened before, plus what was untouched before, which is the 60%. We did not take the 60%, so life will give you 100% plus 60%. That's what usually takes place. This is about Fibonacci retracement and Fibonacci extension. Okay, you may be wondering what I'm talking about here. Just take it from me. When life takes back 40%, life is likely to give back 140% back. That's what usually takes place in the third area wave. Now, this video is not about area wave, but talking about the trading plan 4060, which is 40 and 60. You need to understand this principle carefully. We have lost some money and we want to recoup some back. We don't want to get back 100%. We just want 60% of the money that we have lost over the time, okay? But you want to understand the principle that we are using, 40 and 60. That's what we are using, okay? So when we want to take back the money that we have lost, we don't want 100%. We just want 60%. So we are not greedy. We don't want to take everything back because we know that life very often will take back 40%. So, though the money that we have lost before, suppose is $1,000, when we are using the TP4060, we don't want to get back the whole, okay, $1,000 back. We don't want to get the whole 1,000 losses back. We want to get only 600 back using, okay, the 60% rule. So we give back to life again 40%, and we want only 60%. It does not mean that we will definitely get back the whole 60%, or we may get even more than that sometime, or we may get less. Okay, but you have to understand the principle of Fibonacci, that when the life take backs, okay, when there is a pullback for 40%, okay, is likely to give us 100% plus the amount that was untouched before. So this is what we have done before. It will give you back exactly 100% plus, okay, 60% that was untouched. For instance, if we took back, for instance, suppose we are here, we took back 60% instead of 40%, we take 60% down to 60% here. What life will give you? Life will give you 100% of the move that was happened before plus 40%. So 100% plus the amount that was untouched. Now you understand why we shouldn't resist the second wave and the fourth wave. Very important. Very often we see recently in the market, some traders are resisting the pullback or the rally in the downtrend or the pullback in the uptrend. But the pullbacks or the rallies are very important for life to give us more. So when we apply the TP4060, we have to understand, okay, the foundation of this trading tool. All right. Now, how do we use, okay, the TP4060? Okay. So suppose we lost, okay, $10,000 in the year, okay, 2011. We lost $10,000, a lot of money. So in the year 2012, we will calculate how much we have lost last year, which is $10,000. Using the TP4060, we will aim to get back, okay, 60% of that 10,000, which is now 6,000. Okay, so instead of aiming to get back the 10,000 that we have lost in the year 2011, we'll aim only to get back 60%, which is $6,000. We'll consider the 40,000 as a loss, completely lost. but we will try to get back 60% of how much we have lost in the last financial year. Okay, but how do we do it? So we know now that we lost 10,000 like in 2011. We want to get back 6,000, but we do not want to get it back in 1 year because we lost it in 1 year. Now there's something else you have to remember. We want to get it back, okay, in 3 years time. So if you lost it within 1 month, you want to get it back in 3 months. If you lost it in 1 year, you want to get it back in 3 years. If you lost it in 5 years, you want to get it back, okay, in 15 years times 3. So you see, this is the time period here, the green one here. So we want to get it back 3 times that period, which is 3 times, okay, the time here, 1 year. We want to get it over 3 years. So we lost $10,000 in the year 2011. We want to get back 60%, which is the red portion. So from this point up to this point, that's $10,000. But we don't want to take the whole 10,000 back. We want to take back only 60%, which is the red one, the deep red here. That's our 60%, which I put here. But we don't want to get it back within 1 year. We want to get it back over 3 years. So each time, if you lose it over 10 years, you want to get it back over 30 years. This is the principle of the trading plan, okay, 4060, aiming to get back 60% of our previous loss over 3 times, okay, the time period within which we lost that sort of money. Alright? Alright? It makes sense? Alright? It makes sense? So remember, you are aiming for 60% of your previous loss, but if you lost it over 1 week, you want to get it back over 3 weeks. If you lost it over 6 months, you want to get it back over 18 months. Okay, this allows you to go back again, going back step by step. Okay, no rush. You want to give it a time, going step by step, because you are dealing with money. You are talking about risk. You want to get back some money, but you can still lose money again. So you don't want to rush into it. That's why you want to give yourself enough time, and also you don't want to take everything back, because you know that life will always take some back. Alright, don't think that there will be some giving back. As I explained to you, if life takes some back, life will give some back. You see, 40% you take back, it will give you back 140 back. So with that principle, we are on the winning side, working together in harmony with the Fibonacci principle and the area wave principle that govern, okay, this messy market. Okay, so what do we need to do, ladies and gentlemen? How do we do it? How do we get those money back? Okay, all right. We will take, if we are a trader, we will use what I call high probability trade, talking about the risk reward ratio, excellent risk reward ratio, high probability trades. Alright, for those who are using the TSTW24, you know what is a high probability trade. Okay, a single red followed by a triple red. That triple red is a high probability trade. Okay, a single green followed by a triple green. That triple green is a high probability trade. So you want to use a high probability trade to get your money back over 3 times the period within which you lost that money. So you will only, so during the day you see a high probability trade, you will take a trade. The purpose of that trade is to recoup a part of your previous loss. So you open a different account. That account, the sole purpose of that account is to recoup 60% of previous loss. Okay, so you do not trade every trade. You do not trade anyhow. You will trade only high probability trade. Okay, during a favorable, okay, period. Okay, all right. For those who are, okay, buying stock and hold stock, you want to know whether we are at the beginning. Okay, the best time for those who want to buy stock and hold, you want to know whether we are at the beginning of a bullish cycle. From the year 1958, it was a cycle that has ended in year 2008. From 2008, there is a new cycle that has begun that will last another 50 years. So in the year 2058, that will be the end of another cycle. So you want to know, okay, whether we are at the beginning of a new bullish cycle. The purpose of the reason why we are posting this video today is because we are expecting a very, very strong bullish cycle to begin in the whole world. But before that, as I explained to you before, we are expecting the S&P 500 and major indices to give us that overdue pullback. Very important, so that we may start a new bullish cycle on a strong foundation that remains to be seen, ladies and gentlemen. So you want to know if you want to buy stock and hold to recoup some of your losses. using the TP40460, you want to locate whether we are at the beginning of a new cycle, which we're going to start a new bullish cycle very soon. Okay. If it has started, I will let you know. It haven't started yet because the foundation is not strong. We may keep going like this on one leg, which is not very good, but we'll see how far we can go with that. Okay, move on one leg, okay, which is not very good. The second thing you want to do, you want to buy stock. You know, the beginning of the bullish cycle, very important. That's the best time to buy and hold stock. Very important. It's not every time that people buy and hold. As you see recently in 2008, people lose a lot of money because they were not trading with the cycle. Okay, you want to buy and hold. You want to know the cycle. The second thing that you want to know, you want to buy stock and hold, or any other asset and buy and hold. You want to know whether they are paying dividend. Okay, is the company paying dividend? Talking about you want to reinvest your dividend reinvestment plan. You want to apply a dividend reinvestment plan. Okay, so you want to know whether the company is paying dividend. You want to know whether you are at the beginning of a bullish cycle. So you want also to reinvest your dividend. You don't want to take them. You want to reinvest them using the dividend reinvestment plan. Okay, you can ask the bank, they will tell you about dividend reinvestment plan, which means you buy the stock, the bank, you open an account with the bank, you buy your stock as you like, okay, the stock that you want to buy, you stay in your account, the dividend that you receive, you will tick the box, dividend reinvestment plan, and all the dividend that you will receive, the bank will reinvest it, which means you purchase more share that you hold over a period of time. But this is done with the cycle. Okay, you want to know which sector to invest in. This is about doing your own homework first. Okay, and also whether the company is paying a dividend. The next thing that you want to check also the net asset value of the stock. Sometimes the stock are very discounted. They are trading below the net asset value. This is gorgeous, which means something that costs $100. For instance, stock that is the net asset value maybe is $100, but the stock went down to $50. That's gorgeous. And if they have excellent product, they are handling the competition, their future prospect is good and excellent, and they have excellent management, very important, because there are people who are running the business, excellent management, you are on the winning side, and you give yourself a winning start. Another thing that you need to pay attention to for those who want to buy stock and hold to recoup 60% of their past losses, they must also use the financial static weight. You want to select financial static weight that is equal to 3. If you see a financial instrument that has a financial static weight equal to 3, that's gorgeous. It means that it has the same root as small median line for 3 consecutive years. Now you want to check whether they have excellent management. When are they talking about their own cycle? Each company have their own cycle. Is the stock overbought or is the stock oversold? Is the fundamental still solid? You want to check the ratio debt to sell, how much it is, is the company has too much debt compared to their sale or to their their revenue. You want to know, so you don't want a company that is too much in debt, like we see for Greece, for Portugal, for Italy. This country has too much debt compared to their GDP, debt to GDP. We want to do the same thing for companies, if we want to buy and hold, So these are few things you need to pay attention to. Talking about the financial static weight equal to 3, we know that financial instrument that has a static weight equal to 3 has a high chance to trend. Now we want to know whether they are oversold. That's gorgeous. The fundamental solid, yes, good. When we want to know, do they have excellent product? How are they coping with the competition? Now we have a new bullish cycle about to begin, also very good. So we are on the winning side, looking for financial assets. Whether you want to buy natural gas or crude oil or gold and gold, as some investors done very well recently, buying gold at the beginning of the bullish cycle of gold. This is what you want to do. I hope this makes sense to you. Talking about the TP4060, a trading tool that aims to recoup 60% of past losses over 3 times the period within which the loss has happened. So this is it about the TP4060. I hope you have enjoyed this video. But before I upload the video, just quickly to mention something very important. We have seen some intruded on our website www.base- trading-strategy.com, people who were not supposed to log in. I don't know whether some of the TSTW24 traders share their password with their friend. Very good. And also we see some intruders, one particular from Egypt that is going into our website www.tstws008.com. These are intruders. We have their IP address and we know where these people live. But what I want to say to traders that are using our trading tool, do not share your password even with your friend. I will not share that even with my son. Do not share with your friend. Do not share it with anybody, because for each person that purchased the TSTW SYS008 or 08 or TSTW24, you receive a unique password, a username. Anytime that you log in, you know that it's you who log in. If you share your password, suppose you live, for instance, in London and you have a unique password, and we see somebody else in another city, for instance, Birmingham, logging into account with your password, that's not very good. That's not very good. And we see the pattern very often. We see very recently, we see a very persistent intruder in some of our websites. All I can say at this stage, do not share your password, your login detail with anybody. If we notice that this continues, what we will do, we will not tell you now. We will do it before we will tell you what we have done, which is not very, very nice. So do not share confidential material with somebody who is an unauthorized person, somebody who is not authorized to use it. Do not share with it. With the internet, every movement can be traced, so do not get into that trick. Recently also we received email from somebody on Twitter, that somebody that tried to use our password on Twitter. We know the person who tried to get into our Twitter account. Those things are happening all the time, but it's not something you want to do. It's not something you want to do. Alright, so this is just for those who are TSTW24, TSTWSY08 and TSTWSY008 traders. As always, if you have any question or any concern, send email to us and we will get back to you. Very important. But discipline is very important. Our purpose is to give to traders tools that work, but we expect traders that we trust to respect our trust, and we will respect also the trust. So this is it about the TP40C0. I hope you enjoy this video that you will put into use in order to recoup at least 60% of your previous losses, concentrating on high probability trade and buy and hold using the financial strategy way equal to 3, checking the net asset value, a company that are paying dividend, that has excellent product, excellent management, at the beginning of a new bullish cycle. Until the next time, enjoy yourself and be very happy. We invite you now to watch the second part of the video, where we will talk about the Euro Australian dollar, we will talk about silver, and we will talk about the S&P 500. So see you in the next part of this video. This is second part of this video about the TP40C0. The first part of this video, we have recorded it on the 20th of April 2012. Today is the 21st, and we are recording the second part of this video, and we will talk about silver, the S&P 500, and the Euro Australian dollar. We are looking now on the silver May futures, the month of May futures. And I remember on the 10th of March 2012 we posted a video on our channel www.youtube.com/Trio. We talk about silver, and I still have my line on my chart on this 4-hour chart of silver. At that point in time, we were drawing this common sense trend line where I'm moving my cursor now, and we also draw this channel, and we were telling traders to watch the channel carefully. And there was this trend line also that we have drawn on the 10th of March 2012, and we were expecting the price to find a support here. You can see the price came down on the edge of this trend line, which I did not remove so far. and finally he break below it and continue movement to the downside, fail to find support here. Okay, now what is happening on this 4-hour chart for silver? The price is doing what? Consolidating. The price is not trending, is consolidating, ups and down, ups and down. When we see the price consolidating, we know that the price is acknowledging a very important level. You need to know which level the price is acknowledging, paying attention to the price itself, the number one indicator. How do we trade? Okay, the consolidation. We trade in consolidation by highlighting the defined resistance level and the defined support level. Okay, but the higher time frame will command, okay, the pattern that you see on this 4-hour chart. The price oscillating, acknowledging a very important price level. Okay, on the 10th of March 2012 also, on that video we told traders that the smart median line for silver, okay, the smart median line for silver was at 29.17, and I was telling traders that there is a high chance that this silver continue the movement to the downside. When I was posting the video on the 10th of March 2012, telling that there is a high chance the price may continue movement to the downside to try to retest the smart median line around the smart median line at 2917. Okay, so this is the future market, the month of May future market. So this is the data for it. So since then we were here that time, and the price you can see it went down, and now it's consolidating here around the zone. If we switch now to the weekly chart, okay, you can see I still have all my drawing on this chart, what I was telling you that time. And you can see the smart median line, this is the thick black line here. Okay, the level of 2917. This is the most influential critical price level. If you do not know what is the smart median line, you need to go to www.articlebase.com and look for the article that is titled Trading Critical Price Level. The critical price level trading tool are excellent trading tool when one is trading commodity. Excellent, powerful tool if one is trading commodity, because as I told you, now you can see the price slowly but gradually is approaching the smart median line in the zone of 2917. The smart median line sometimes will behave like a magnet, attracting the price to its technical fair value, because the smart median line is the technical fair value of the financial instrument. You see, we are still stuck in this a bearish triangle, and the price slowly but gradually, there's a high chance that it may try to come near the smart median line. Okay, that's what we see on the weekly chart. Now we move on to the monthly chart. That's how you will do your technical analysis instead of stopping on the 10-minute, 5-minute, hourly chart. Be curious, please. Okay, so now this is exactly the same thing. The bearish triangle is still here. You do not discount the bearish triangle. The strategy, if you want to sell on the edge of the bearish trend line of the bearish triangle, that will be a better place. Okay, or if you see another fractal bearish triangle, okay, you may like to play it also. Okay, so this is what we see again on the monthly chart. Similar picture. The primary trend line that I've drawn on this monthly chart, this point, and somewhere this point, allow me to draw this trend line where I'm moving the cursor here. Also, the price is seeking to retest near the smart median. That remains to be seen. So price is in a bearish triangle on the weekly chart. On the monthly chart, I believe in this condition, in normal condition, one must give priority to sell signal on the edge. Okay, all right. Now you can notice that I didn't use the daily chart because there are too much distortion on the daily chart. That's why I try to stay away from the daily chart. If you want to use the daily chart, one must use cycles. Okay, you want to use cycles when you are using the daily chart. That's very important. Now, other questions: if you are trading on any time frame and you want to use, I do not talk about a higher time frame. I always talk about higher time frames, which means be curious, be curious, be curious. Nothing should stop you to check the weekly chart, the monthly chart, even the yearly chart. So it's there for you. Okay, so this is what we have now. Okay, where are we now? We are on the quarterly chart. I want you to pay attention carefully. I want to tell you something very important here. Okay, let's bring my drawing tools. Okay, now The small median line is somewhere here where I'm drawing my line now, because we can't see on the quarterly chart. Is somewhere here where I'm putting again another tick line. You can see it's just on top of this green candle. Can you see on your chart this green candle? The high of that green candle is exactly at 2907. That's the high on the quarterly chart of this green candle here. Okay, so after this green candle, we see a bearish activity here in the year 1980. Okay, 1980, silver was very bullish. You can see 1978, from 1978 to 1980, you can see that silver was going up. Okay, like we see recently to the same zone, and suddenly we have this bearish engulfment. Okay, after this bullish candle, there were sellers in this zone, this same zone, because as I told you before, okay, to achieve consistent winning trade, one must locate valid hotspot on the zone. This is a selling zone. It's a hot spot on the zone. The price went up to this level. This is in the year 1980, and changing direction. We will highlight this level and wait for the price to come to the same zone in the future. And recently, the price returned back to the same hot spot on the zone where traders sold it. They did not forget, they sold it again, and they continue to sell it now. Okay, we will see whether the fundamental will allow it to turn around when it reaches the small median line level right here. Okay, all right, it makes sense. Okay, it makes sense. All right, it makes sense. Okay, so this is what has happened here. The same thing happened here again. Same zone, hot spot trading zone. All right, so we see now that the price went to retest the previous high of this tall candle where my cursor is, went above it a bit, only to crash down. Now the price is trying to stabilize itself, which means the price will try to go to its fair value, its technical fair value, which is the small median line. That will be a better place for investor to give it another chance to see whether it will go up or it will continue the movement to the downside. Trading on or near the small median line can be very tricky, because there is too much activity taking place, because some trader will just place order to buy, some trader will place order to sell, so it's a bit tricky to trade near and the small median line. Okay, so you see now, okay, so if we try to be a bit curious, we go again, nothing is stopping us. As far as we have the data, we will use it. So this is again, this is the yearly chart. This is my small median line. You see the tall yearly candle here. And this is the year 1979 where I'm moving my cursor. This tall green one. Okay, and you can see here the small median line. This is it. So you can see that the price was bullish again, and now we are coming to near the small median line. Okay, so there is a high chance that the price may come and retest it. It does not have to, but there is a high chance that the price may. Trading is all about probability. Sometimes trader will waste too much time try to know exactly what the price will do. You will never know what the price will do. If you try to do that, you can create the best indicator or robot. It will never tell you what the price will do in the future. You can try to estimate how far the price can go, the probability that the price may go down. We use tools like the triangle, the stable data. We see now on this chart, on the monthly chart, on the weekly chart, we see a bearish triangle. So the probability, the odds, are in favor of the bear. Alright? So that's how we will trade. We don't want to know what the price will do. I don't care what the price will do. I care about, we care about what the price is doing. That will save you all sorts of trouble, and will save you a lot of time, and you enjoy yourself. Otherwise, you spend your time looking for some miracle or for some, and it doesn't exist. I've done it myself. And I don't want to do it anymore. I don't want to get involved in it at all. I stay away from it. Because I spent too much of my time doing that before, trying all sorts of indicators, all sorts of blah blah blah, and they won't give you anything. The price is the number one indicator. So we see now. Now I want to show you something also talking about silver. I'll quickly go to the weekly chart again, and is it on the weekly chart? This is the weekly chart. Let's see. All right. Now We can see on these charts, okay, the price. As I told you before, there are some stable data that we use, and one of them is that the price does not go vertical. Okay, I said this 100 times. The price does not go vertical. And the normal progression on the price is a diagonal move. You can see a diagonal move here. Price went diagonal. This is the normal progression on the price. Okay, but suddenly we see that the price went vertical. It's abnormal. Okay, we do not try to sell it straight away, but we know that something abnormal is taking place here. You see, it went vertical, then it went diagonal, which is a normal progression on the price. Here again, you can see that it was a normal progression of silver, a normal progression, and then abnormal progression. We will acknowledge it, looking for opportunity to sell. As I told traders, okay, when this was taking place, to be very, very careful, because the price does not go vertical. It's a distortion, it's a manipulation, and you know that the market will rectify itself, which it did here big time, very fast, down, down, down. Okay, corrected itself because there was a distortion. Okay, so now when we see that, I showed this to traders before. Okay, I hope they are using it. Okay, so diagonal move, vertical move, what do? We project it. Okay, we project, we draw, we go to school again and draw our lines. Okay, so we have our, okay, we draw a line, projection of this line to the upper side, projection of the vertical line to the other side, and then we draw the diagonal. Okay, that's the diagonal right here, and then we project this diagonal, we project it also to the other side. Bam. Okay, that's it. That's where we will put it. So there's a high chance that the price, if the price find a resistance, if the price reaches the small median line and went below it, and find a resistance below the small median line, there's a high chance, if the fundamentals are not sound for silver, the silver may go down even up to 1,000 region, somewhere here. Okay, that's a long-term bearish view, because of, we see very often, sometimes the price may take longer. It may take maybe 2 years, 3 years before it reaches this level. Sometimes it may not, but very often when we see the price go go diagonal followed by a vertical move, and we do this kind of projection, very often the price will take some time, but slowly but surely we come back here and retest this level. Okay, so that's all I can say about silver. Looking at the short term, this is the long term view, but it may take longer, it may not happen, but this is something we can, okay, acknowledge, know that it's possible. But we following the price of the number one indicator. Going to the 4-hour chart again, ladies and gentlemen. For those who are day trading, you will use a higher time frame key levels and make your decision on the edge. That's how you do. So on this 4-hour chart, you will draw the key levels. You see, there's one here. This top, this top, this top. So there's solid there. Here there was a low, a low, a low. They bought it here. So you are now at the bottom of the base. So if you want to buy, myself, I will give priority to sell signal, which means I'll prefer the price to come to a resistance level, okay, either on a daily chart or the weekly chart, and I will take the signal from there to sell, because I have a bearish triangle, okay, on a higher time frame. In this condition, one can perfectly continue to lose because the price is going up and down. Okay, it's not directional move. One should trade carefully, because if the price is consolidating, the price is acknowledging a very important level. One will draw the horizontal line here, okay, this level here, and highlight it carefully, this level here, in the level of 3119. This is the main future market for silver. Okay, 3119, that's the base of the consolidation session. So if you are desperate to buy, it will be better to look for opportunity to buy at the base of the consolidation session. As you can see, though the price is blah blah blah, is displaying lower high. There was a high here, a lower high, and now we are stuck here. Okay, this is about silver. The next candidate will be, okay, S&P 500. I invite you next part of the video to watch the video about the S&P 500 on the yearly chart. As I showed you before in my previous video, the hotspot trading zones on the yearly chart, and also we have drawn the pitchfork tool. The pitchfork tool is joining one hotspot trading zone through the center of a previous price movement. You can see that the price went down from here down to this level, and we joined this horse spot trading zone through the center of that movement. Okay, it allows us to have the median line of the pitchfork tool. On the yearly chart, we can see that that the price is retesting, okay, the median line on the dot for the S&P 500. Now, there's not much to say about the S&P 500 because we have covered everything that we need to say about the S&P 500. I want you to pay attention to the blue line here, which is the median line of the pitchfork tool that I drawn on the yearly chart. Okay, and if you go now to the daily chart very fast, okay, so there's not much to say. Okay, on the daily chart, what do we see? You can see that the price, this is the blue line I'm talking about here. We're drawing for the yearly chart, and when we switch now to the daily chart, you can see that the price display a triple top on the daily chart here, and then went down below the peak trend line that we have done before, and now it's to retouch to retest this blue line. Okay, here you can see it touch it, went up on the support again, come back, touch it again, and went up again. Now it's coming back again near the blue line. Okay, also on this daily chart, you can see that we are in a triangle. Can you see the triangle? Okay, there's this triangle. Can you see? All right, so if you want to buy, you want to trade on the edge. Now, very important, we see traders very often will try to buy or sell at the wrong place. Sometimes the price will be in a place that will be a bit tricky, which means the risk is quite high if you enter in the middle. Okay, now to avoid that a lot of mistakes, okay, you want to enter the trade where the risk is very low. This is why we are talking about trading on the edge. Okay, so we are now in a triangle. Suppose you are an eternal bull and you like to buy, okay, you don't like to sell, you always look to buy. Okay, this is the market, the S&P 500 itself anyway, that is governing, okay, all the financial activity, represent, okay, what is happening in the market. Okay, so you will allow it to come on the edge, at least drip it down near the edge of the triangle, and then you will take it maybe back again here, okay, and take profit and come back again before, if you come out of the triangle, then you will be perfectly bullish. You will use the trading zone. If you don't know what is the trading zone, you go to www.youtube.com/jotrio, check the video that we call trading zones, okay, and you will understand it. You want to give priority to bullish signal in the bullish zone and priority to sell signal in the bearish zone. Also, when you are using a trading zone on one time frame, nothing should stop you to look on the higher time frame, okay, to see what is taking place. Now, because some traders sometimes will ask, Joe, should I look at this time frame? Yes, look at every time frame, weekly, daily, monthly, yearly. If you have the data, that's the best way, so you can see, okay, the bigger picture. So we are in a triangle. Okay, not much to say. If you go down to the 4-hour chart, you will see similar picture again, the same thing. The triangle is still valid on the 4-hour chart here. Okay, the price is just coming near the blue line, which we have drawn from the yearly chart, so it's a solid level we should watch. So there is a high chance that it may try to come and test it first, and we'll see. What we were doing before, we were somewhere here before. You remember the yellow line that we draw on the weekly chart, the green one from the monthly chart, and we take it gradually, and now we are above the red one. We were doing all this line. You see the levels. The price went up. Okay, now it starts coming down, so we will do the reverse. So our strategy, if the bearish momentum continues, repeat, if this is not a signal to buy or signal to sell, if the bearish momentum continues, the bearish momentum is strong, the price will seek to retest the green one. If the green one fell, then we will seek to retest the yellow one. Okay, I did not extend my yellow one here. Okay, probably in the next time I will extend it, so you see. So right now we are on the edge of the blue line, so in a kind of support zone. We will watch it carefully. We are also in a triangle. Okay, so use the TSCW34, TSCW08, TSCW08, but on the edge. Understand what has taken place. There is a triple top here, which means some traders sold it. On the yearly chart, the price couldn't reach the previous, okay, hot spot trading zone. As I show you, it touches here, we were trying to go to the same zone, okay, right here. There is too much money printing going on. That's why the market is going up. Quantitative easing. They're talking about International Monetary Fund to pump more money into the Eurozone. If that happens, you will see again market will go up. If China also starts pumping money into their stock market, the market will be going up. But the main thing that you need to be aware of is that we want to look at the fundamental of each financial company. If the company has a strong product, okay, a viable product, are they innovative? How are they coping with the competition? Is the balance sheet strong? These are the core value. We want to check the core activity of each financial instrument, talking about the stock market. The quantitative easing is a political decision that the Fed is adopting to assist the economy at this junction, because we don't want too much unemployment, okay? So this money printing is just one thing, but the purpose of it is to help the job market, to be honest, to help the job market. But when we are talking about investment, hard-earned money put into investment, one must check the balance sheet, one must check the ratio, like a debt to sell. All these kind of exercise are very important. So if we have a kind of bubble taking place in the market, which means printing money, market go up, printing money, market go up, that's a bubble. That will, you know what's happened to the bubble? It will burst at one point. So be aware of it. Price may continue the movement to the outside, but right now we can see on the yearly chart we are hanging, okay, alright, you see, on the edge of the blue line on the yearly chart, and on the daily chart we have seen, okay, the triangle, alright, and also on the 4-hour chart we have seen also, okay, the triangle, okay. We want to trade on the edge where the risk is very low. You don't want to take a trade because you want to be in a trade, get some games to play when you feel bored instead of placing a trade, okay. That's very, very important. So as I explained to you, we were doing it before on the weekly chart, talking about the S&P 500. Our lines are still there, the yellow one from the weekly chart, the green one from the monthly chart. If it's rolling it down, if the blue one fell, the green one will be our target. If the green one fell, the yellow one will be your target. That will be the reverse. But now we are on the edge of the blue line, which is the median line, a line that is drawn from the yearly chart. Okay. The next candidate is the Euro Australian dollar. Now, for the Euro Australian dollar, you need to go to www.24elliotwave.com, click on Practical Elliott Wave. When you come to www.24elliotwave.com, you click on Practical Elliott Wave. There are 7 videos here. The first 4 video on this page was posted on the 16th of April 2012, talking about Practical Elliott Wave trading. This is not about currencies, this is about Elliott Wave, practical wave trading. But we have selected the Euro Australian dollar to show traders how one can use Elliott Wave practically, okay. But this technical analysis, okay, we allow those who want to know more about the Euro Australian dollar to come here and watch it and understand what is likely to take place. What are the odds, okay, for the Euro Australian dollar, which stage we are in, talking about wave trading, okay, for currency traders. But this is more to do about understanding practical Elliott Wave trading. It's not about, okay, currencies as such, but we have selected the Euro Australian dollar as a financial instrument to demonstrate to traders the practical Elliott Wave trading. So the first 4 videos, you can see the background for these 4 videos are black. And then we posted on the 20th of April 2012 3 more video. You can see the background now has changed to green for each video here. Alright, so you can come here and know exactly what we are talking about for the Euro Australian dollar. Okay, that will be the end of this exercise. We have covered silver, we have covered the S&P 500. If one wants to know more about the Euro Australian dollar, one must go to www.24areaway.com and click on the page practical area wave trading. Okay, that's the end of this video. It has been a long video, my apology for that, but I hope you have learned something from it, especially the TP4060 that you will put into use in order, okay, to manage your money carefully, especially to recoup your previous losses. Okay, until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Thank you for watching, and we will speak to you very soon.